Introducing Bluehost Cloud, ultra-fast WordPress hosting with 100% uptime. Want a website with unmatched power, speed, and control? Of course you do. And now you can have all three with Bluehost Cloud, the new web hosting plan from Bluehost. With 100% uptime and incredibly speedy load times, your WordPress websites will be dependable and lightning fast on a global scale. Plus, your sites can handle even the biggest traffic spikes without going down or lagging. And with Bluehost Cloud, you get 24/7 WordPress priority support, meaning you're connected to WordPress experts anytime you need them. Not to mention, you automatically get daily backups and world-class security. So, what are you waiting for? Get Bluehost Cloud today by visiting Bluehost.com. That's Bluehost.com.
Welcome back to another episode of Investies. I'm your host, Linda Garcia. Move over, Wall Street. There's a new sheriff in town. Y'all Street is gunning for you. But before we get into that, let's break down our inflation data for the month, as well as what Fed Chair Powell had to say about our interest rates. Inflation data for the month of May came in lower than expected. And month over month, we actually saw 0% increase in inflation. We haven't seen a number like that since July of 2022. But is this good news? Let's get into it. Okay, so I don't want to sound too cynical because, of course, month over month, 0% unchanged inflation for May is great. It's down from 0.3% in April and 0.4% in March. And analysts were actually expecting a 0.1% increase. So we're actually doing pretty good. We did much better than what analysts expected, coming in at 0% unchanged. When we take a look at inflation data year over year, we came in at 3.3%. This was 0.1% lower than the analysts' expectations, as they were expecting 3.4% in the month of May. In the previous month of April, inflation data came in at 3.4% year over year. So you can see that we were expecting a 3.4% for May. We came in at 3.3%, and we're down 0.1 percentage point from the month prior. Yes, this is positive. We're seeing a change. But what I want us to pay attention to is not just an average number, but how much items are increasing on an individual basis. One of the biggest reasons that we can attribute this drop to for the month of May, both year over year and month over month, is because of the decrease in gas prices. So when we take a closer look and look at individual items, it tells a different story. Not to mention that when we look at individual items, we can see how lower income households are being massively affected. I think that we come from a place of privilege when we get to average out a number on inflation versus looking at costs for items that are necessary in all homes. In order to help us put all of these numbers into perspective when we're talking about 0% unchanged month over month and 3.3% increase year over year, let's look at the individual household items starting with food. Juices and drinks have increased 19.5%. Frankfurters, which are meats that are encased like hot dogs and sausages, came in at 7.3%. Bacon and related items came in at 6.9%. Sugar and sugar substitutes came in at 6.4%. Uncooked beef roasts, 6%. Pork chops, 4.6%. Dried beans, peas, and lentils, 4.6%. Shelf-stable fish and seafood, 4.4%. Crackers, bread, and cracker products, 4.2%, candy and chewing gum, 3.5%, butter, 3.5%, canned vegetables, 3.2%, and eggs, 3%. Now, when we look at items other than food and energy, which we already talked about, gas really came down exponentially. We're looking at 2.1% in gas, a drop in energy as well, coming in at 3.7%, which again is what has attributed to the drop of the overall inflation percentage. So when we look at other items, we're looking at admissions to sporting events. That has increased 21.7%. Video discs and other media has increased 20.7%. Motor vehicle insurance came in at 20.3%. Care of invalids and elderly at home, 11.1%. Motor vehicle repair, 9.5%. Photographic equipment and supplies, 9.2%. Outpatient hospital services, 7.9%. Indoor plants and flowers, 7.7%. Veterinarian services, 7.6%. Checking accounts and other banking services, 6.4%. Rent of primary residence came in at 5.3%. So when we take a look at these increases on an individual basis, we can see that this can in fact be detrimental to our lower income households. Also, something really important to take note of is that these numbers are averaged out even on an individual basis. So we can actually have food products and services increasing much higher in specific states like California, Texas, New York, where we have high density population. Again, these are simply just averages. On last week's episode, we talked about people's perceptions of where the economy is. We specifically talked about the poll from The Guardian that showed that 55% of Americans believe the economy is shrinking. Along with that data, we found out that 56% of Americans believe that we are in a recession. 49% of Americans believe that the S&P 500 is down for the year. 49% believe that unemployment is at a 50-year high, when in fact, unemployment is actually at a 50% year low. When we're looking at economics, data, and statistics, it is really important for us to consider how inflation rates are affecting the majority of Americans, not just an average. And so, of course, we have averages of around 55% of Americans feeling like the economy is doing extremely bad. That is because only 15% of Americans are invested in securities like stocks. And when you're invested, you're actually benefiting from the positive that is taking place in the market. We know from this podcast that year to date, the market is performing exponentially well. However, all of low-income community members are being absolutely crushed by the increase in prices. Shortly after this data was released, we heard from Fed Chair Powell on whether or not interest rates were in fact going to come down. Now, if we take this conversation all the way back to November, you will remember that at that time, Fed Chair Powell was extremely confident in saying that at the beginning of 2024, we would have rate cuts. that did not happen. And he keeps on kicking the can down the road, as he should. Lowering interest rates is a sure way to see more increases in inflation. Unfortunately, increasing interest rates is the only armor that we have against inflation. I recently had a conversation with a well-off businessman who the majority of his clients are also business owners, and he was expressing his frustration with interest rates and communicating that if interest rates did not come down soon, that the majority of his clients are about to lose their businesses. And it was so important for me to communicate with this man that we cannot lower interest rates at this point in time, because if we do so, our lower income communities will lose their homes and will be unable to put food on the table. Those are the folks that need to come first. This is why it is so important for us to have diverse voices in economics so that we can have proper advocacy for our lower income communities and highlight the detriment of policymaking for all communities, not just the communities that are participating and benefiting. The folks that get to talk about economics and policymaking are so enthralled in their world that they forget about the lower income households. I have been saying since the start of the year that I do not see interest rates coming down in 2024. Now, at first, Fed Chair Powell said that we would see the first set of interest rate decreases come in at the beginning of the year. In our last call, he said that we would have 3 decreases towards the end of the year. And in today's meeting, he communicated that we will not see 3 decreases, that we will potentially see 1 decrease at the end of the year. Again, I don't think that we should see a decrease in 2024. I think it is important for us to focus on lowering inflation, making sure that prices are coming down and are much more affordable for our lower income families before we take care of anyone else. We're going to take a quick short break, and when we get back, we're going to discuss Y'all Street. And we're back. There is some really interesting news developing in the stock market. BlackRock and Citadel Securities are among big players that are supporting a group with plans to launch a new national securities stock exchange in Dallas, Texas. The name of the stock exchange is set to be TXSE and will rival the New York Stock Exchange as well as the NASDAQ. The chairman and CEO of TXSE is named James Lee, and he's revealed that they've already raised $120 million thanks to over 24 investors. This move comes as Texas experiences rapid growth. The Texas economy is now the 8th largest economy in the world. Reports from the Wall Street Journal highlight that this new exchange aims to be more quote-unquote CEO friendly compared to the established New York Stock Exchange and the NASDAQ. So as it stands right now, New York has highly regulated laws to protect investors. So there's a little bit of politicizing that is going on right now on the angle that the TXSE is positioning itself. TXSE's vision is to become fully electronic, nationally recognized stock exchange sanctioned by the U.S. Securities and Exchange Commission. They do have plans to start trading in 2025 and hosting listings by 2026. TXSE is setting its sights on catering to companies in the southeastern region of the U.S. On CNBC, Governor Abbott said that the TXSE is going to be for companies whose only agenda is capitalism. I'm rolling my eyes. Can you feel me rolling my eyes? This is exactly how they position things to keep us away from participating. And then we don't increase our assets. We don't build generational wealth because of the narrative that is formed around capitalism in the United States of America. And to make things worse, then we end up crushed by inflation, which is exactly why we need to participate. It's our responsibility, especially if we live in this country, to not just be consumers, but to also be owners. You're listening to Investies, a Cosmic Standard and In Luz We Trust production. I'm your host, Linda Garcia. A special thank you to the team, Asia Simpson, Eliza Smith, and Jacob Winnick.